Hey guys, welcome back to Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. We are going over our weeks 10, 11, and 12 for the Robinhood Investing Challenge. I apologize for not getting weeks 10 and 11 out. I was actually in the Philippines. I'll just have a few really nice pictures up top on the right, but I went and stayed in the Philippines for 10 days. We stayed in Manila, we stayed in El Nido, went to the island of Palawan. It was amazing. We went to seven different islands. We did a little excursion tour, did some snorkeling. So I didn't get to invest. I didn't get to do much really. So it was a nice little getaway from work and the YouTubes. But with that said, let's take a peek at our current Robinhood situation and what we've invested in because since last week, I believe I've purchased a couple stocks, ticker symbol HMC, Honda Motor Corps, and ticker symbol ORGO. That's Organogenesis health company. Um, or a physical health company. And I think that might be it. But let's just go ahead and take a peek and see what we're at in terms of year-to-date performance in Robinhood. So, year to date, I'm down 3.24%. I did sell ticker symbol DGHI on Friday. I did note in my community tab on YouTube that it had a triple top at $1.65, and the next support was literally at my purchase price of $1.29. So I did sell and I got about a 10% gain. I am holding ticker symbol AEY, ticker symbol BYD. I don't know if we went over Boyd yet. HMC, Orgo, like we talked about, and then SDIG, which I do have a limit buy order at the support. If you review my latest crypto stock or crypto mining stocks video, you'll see that I actually had a change of heart when I was reviewing Stronghold Digital Mining, ticker symbol SDIG. It was uncovered that the CEO and another executive had a separate business where they invested 36 million. The CEO purchased a separate 1 million, and they're doing a lot of their in their power to reconcile and strengthen the balance sheet. So I'll put that video up top for you guys so you can go check it out. But here are the stocks, and I just want to show you why I invested in these stocks on FinViz so you guys can get a picture of where I think the price is going to go. And also, I did purchase 40 more shares of ticker symbol AEY. They had great earnings released last week. And the stock is down. So the next step is I'm down 14%. So we can review that company as well and make sure nothing material has changed in terms of their debt situation. Are they still a healthy company, etc. So my next plan of action there is to wait for a new support and then purchase hopefully 40 more shares at a lower price. So with that said, I'm down 3% for the year. Let's take a quick check on SPY and where is my Gmail? There it is at the bottom. Take a quick check at the SPY. Whoops. I'm down 3%. I think the SPY is up 3%. Let's see. I'm down 3%. Yep, the SPY is up 3.9%. So the S&P 500 is currently outperforming me. So good for the S&P 500. Again, if you guys aren't aware, that is the top 500 companies in the stock market. I do recommend that if you're not picking your own stocks, you are utilizing the S&P 500 because over time, the S&P 500 has always gone up. Let's just see. I know this goes back to like 1926, but if we just look at this chart, it's survived terrorist attacks, it's survived pandemics, it's survived war, it's survived global financial crisis, you name it. So, yeah, the SPY is something that I would recommend you look into for a potential just buy and forget, set and forget type of purchase. Because then you don't have to worry about investing in individual stocks, the stress that comes with that, etc. So again, we're gonna go in, jump into FinViz to look at Honda Motor Corp's Organogenesis and ticker symbol AEY Advantage Technologies, and potentially Boyd. We'll look at all four. So yeah, let's go ahead and jump right into that. All right, so the first company we are on is ticker symbol AEY, which is Addvantage Technologies. I just recently created a video about this company comparing it to Siva. I'm just going to go ahead and post the video above if you want to check that out. Um, so again, looking at their sales, they do 96 million in sales. They lose 1.1 million. Here's where I think Wall Street is getting this company wrong, which is a wonderful thing for me, is the company makes so 96.2 million a year, but they also lose 1.1. So 95 million a year divided by 4. So they make 23 million dollars a quarter essentially, and their market cap is 16 million. So they are making more than their market cap, which is insane. It's kind of crazy. So also, if we look at sales minus income, we come to 95.1. And let's divide that. That's 95 million. And we're going to divide that by the shares float, which is the shares available to the public. So 8.5 million. So this company that's the key word, could be worth $11. Also, since they did just release their earnings, let's just look at some of their metrics here. All right, can you guys see everything? Yes, okay. So going on down, looking for the numbers. Okay. So I don't want to just pick and choose data points because I feel like that makes me more biased. Um, but I do want to look at the facts. Here's a good one. Advantage Technologies finished the full year at positive net income for the first time in 6 years and is poised for continued wireless growth in 2023. Boom, shakalaka. That's huge. That's amazing. This was a $7 million turnaround on the bottom line year over year. Consolidated revenues increased 5% from the same quarter a year ago and 56% for the year. We also saw a margin improvement as gross margins increased 254 basis points for the year. So 2.54% increase. What is their gross margins? So 28, so around 30%, I think is what they're around now. And I got that by looking here, and then I went to gross margins. They're at 28% for the year. This is older data, by the way. And if they increase it by 254 basis points, 2.54%, so that puts it at like a 30.7% gross margin. I just want to show you that. I mean, this is nothing but good news to me, honestly, everything in here. And I also listened to the earnings call and the CEO, I forget if it's the CEO or the president, did mention that they are forecasting for strong growth in the future. So yeah, I'm loading this one up. I have 80 shares in Robinhood and I have 30,000 shares in my personal account. So I really believe in this one. It will probably get down to 50 to 80 cents before it starts to reverse. Based on I'm just saying that, don't hate me. I'm just saying that based on if we look at the chart ever since the 90s when the company was created, that's the low that the price went. And obviously it recovered and went up and blah, blah, blah. But we're in really tough tightening times right now with everything going on in our economy, the macroeconomics, the rates going up, um, which the rates going up does not particularly affect AEY because AEY doesn't have much debt, which is again another positive. Um, so again, I believe in this company. I'm gonna wait for it to create a new base, a lower base around maybe $1.80, and purchase some more potentially. We'll see what happens if nothing drastic changes in the company, but all sounded and looking good for AEY. Again, there's a video that I posted um, about 5 minutes ago. If you just go back 5 minutes, you'll see that link. Um, all right. Now let's look at the next stock, which is going to be Boyd Gaming. All right, we are looking at ticker symbol BYD. This is Boyd Gaming. We're looking at the daily chart here, and as you can kind of see, it's in this upward channel. We have this purple line as resistance and this blue line as support. We can see that it might be hard to see, but there's a faint yellow line down here, which is the 200 SMA. I believe the stock price is going to try and test that. If it bounces off of that, I'm probably going to buy more. If it falls below that, we're going to wait for consolidation and we're going to wait for new support to be built. And I'm definitely going to buy another share then. So I'm going to buy more Boyd Gaming stock. It's just a matter of when. And since we're looking at charts, let's just look at the weekly here. Ooh, look at this setup. These two dojis right here, not a good look. Two dojis back to back is usually bearish in my opinion. Let's take a look at the monthly chart. Yeah, we can see this candle right here. We're gonna have to see a large increase of volume. If it's gonna, tomorrow's the next week of the month, so we're gonna have to see some type of reversal next week. It's gonna have to be about a 10% reversal. That would be very strong and very bullish for the company. Um, so yeah, I only own this in my Robinhood account. I only own one share. I wish I owned more. Let's look at the financials and see what the stock is actually worth. Is it overpriced or underpriced? So the stock is $60 right now. Let's do our calculations. So if the market cap is over 1 billion, what we do is we add this number to the stock price. So here's a great example. Please grab a pen and paper for this. So this is 6.18 billion. We're going to divide that by 100 million and we're going to convert that to the share price. So 618,000,000. So this is no, that's trillion. Here we go. 6,180,000,000 divided by 100 million. So we're going to add $61.8 to the share price. The share price is already $60 right here. So this is a no-brainer in my opinion. And you're asking yourself how did I come up with that stupid math? I used to work at a tech company and they valued our stock every 100 million that we had, sales, etc., converted to a $1 share price. So that is for small microcap companies, but this conversion works for companies with over a billion market cap, adding this conversion. So we have 61.8 here. Keep that number in your head. So now let's look at sales plus income divided by shares float. So sales is 356 billion. 3,560,000,000 plus 639,400,000. So we have 4,199,400,000 divided by 74,500,000. So that's a stock price of $56. So either way we spin this, and then if I hit add the $61, $117 does not seem out of character to see this stock price go that high. And to further back up my math, the price earnings considered anything under 15 is considered undervalued. So this is undervalued. And it's saying in the future, this is very undervalued. And I agree. Um, Couple other things I want to note, which makes me very, very secure in my decision and confident with you guys, is look at the earnings per share over the past 5 years. This company, Boyd Gaming, continually performs very well. Over the past 5 years, 44% return. Sales over the past 5 years are positive. We do also want to note that this company is in Las Vegas and they might have some other locations elsewhere, but they were closed down during the Great Lockdown. So, again, like resilient. This company is resilient. Insiders are selling here, it looks like, and institutions are selling a little bit. Let's just confirm that. Fintel, let's look at that because this is a little bit of older data. Finviz is a little bit laggy. So institutions own 69% according to this. But if I had to guess, I'm going to say institutional ownership is going to be higher than 69%. Do you see that? 86%. That is that's a huge change. When Finviz updates their data, they're going to see institution this is going to show institutional transactions positive and this is going to be 86%. Crazy. That's amazing. Their gross margins are 56%. Profitable. You can see right here, profitable. One thing I do want to note, and I don't like this about, I almost said Red Rock, about Boyd Gaming. Look at their quick ratio. They're at a 0.8. I wish they were over a 1. They make adequate cash. They pay a dividend. Their debt, they're very slowly paying off their debt. And if we look at their debt, it is disgusting. Revenues are increasing, beautiful. Net income increasing like crazy, beautiful, beautiful, beautiful. Okay, the CEO's been selling, and the executive vice president. Um, I mean, but they're always selling, so whatever. Okay, cash. They have 283 million in cash. Total assets 6.3 billion. Total liabilities 4.7 billion. Nice little cushion there. Total debt 3 billion. So I don't like that. But I mean, they continuously make cash flow. They're profitable. Who am I to judge? Huh? But I really like this company. I feel like this is one that I'm just gonna buy once it touches and gets a temperature check on the 200 SMA, which is right here. You guys, I don't know if you can see it. Is it gonna fall through? Is it gonna bounce off? Either way, I'm gonna add more. Just a matter of time. Let's go on to the next stock, which is Honda Motor Corp. Yes. All right, so we are looking at ticker symbol HMC. This is Honda Motor Corp. This chart is, excuse me. It kind of looks like it's in a megaphone. My head's in the way, but it's going boop, 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 boop. It's kind of expanding as it continues. Let me scroll back up. So it's right now currently above the 20 SMA, above the 50 SMA, both over the 100 or the 200 SMA. So this is a technically healthy stock at the moment. It might come down and test the 200 SMA at $24.50. Either way, I'm not worried about that because we're going to look at the data points here. So, yes, so again, looking at their market cap, they have a $47 billion market cap. If we divide that by 100 million, that gives us a share price of $47. The stock is right now currently at $25, so I feel, again, confident and comfortable with that. Let's look at sales plus income divided by shares float, and I can already just do the math in my head. 122. So everything is in billions. You guys, so this is, oh, I'm on the wrong screen. So billion, billion, and billion. So I don't need to do a long form calculation here. Um, so let's do 122.64 plus 5.3. And let's remove their debt because they are a auto manufacturer, and let's just remove their debt. Total debt is 8.1 billion. So minus 8.1. 119. And I just want to let you know, like, because you're probably reading this in trillions, but this is in values in millions Japan currency, which you can't see. So right there, JPY. So these are showing up. Some of these, like this retained earnings looks like 9.5 trillion, but it's actually 9.5 billion. So just wanted to call that out. So that puts us at 119 billion after we remove the debt. And if we divide that by the shares outstanding, which is available to the public, I'm sorry, shares float, which is available to the public, we come up with a stock price of $71. Um, that is insane and believable. We have a PE of 8.27, meaning this is very undervalued because a PE of 15 means that is undervalued. So this is double undervalued. And they don't even have a forward PE because I'm guessing it's so undervalued they couldn't even show it. The recommendation on stocks of 1.7. The lower you go, the more of a recommendation it is. Quick ratio is 1.10, meaning they have adequate cash to pay any liabilities, which is great. Gross margin 20%, that's solid. They're profitable. Sales over the past 5 years, 0.8%, which kind of scares me because we did have a huge boom. We have earnings per share over the past 5 years, 3.7%, still both positive. Institutions have been adding. It says they own 5.5%. Let's just get a temperature check on that. HMC. So 5.5% institutional ownership. This shows 15% ownership. So, yeah, that's pretty cool. BlackRock purchased 128 million shares January 31st, 2023. Oh my gosh, amazing. So that's crazy. Yeah. So this looks good. I did call this out saying it looks like it might be attempting to break a multi-year um trend. So right now we can kind of see that if you can watch my mouse, it's going down. But if we look more right here, it looks like a inverse head and shoulders. We have a shoulder here, left shoulder, head, right shoulder, and now we got to wait and see. Again, this is a company I want to purchase more of. So we're going to see how this reacts over the next couple weeks. It is a slow burn mover. And what I mean by that is since October 2022 to today, it's gone up like 10%, 20%, which, is great considering the market conditions, the macroeconomics. But again, this is like a slow burn move, in my opinion. So all signs point to higher price targets. JP Morgan actually upgraded the stock on the 28th of February, so last month. So yeah, that's why I like Honda Motor Corp. I don't have my Thinkorswim open, but yes, this is why I chose this one. Again, it is flirting with the 200 SMA. Just gonna see how it reacts. I would buy more of this stock. And let's move on to our next one, which is Orgo. All right, we are looking at ticker symbol ORGO. This is Organogenesis Holdings Inc. And if we look at the stock, it has had a fall from grace. Let's look at the monthly chart, just get a bigger picture of everything. So it came public back in 2017, and we can see this move here Definitely made this chart very skewed. So that is why it looks a little crazy. Um, all right. So it's not nothing too out of the ordinary here. If we go to the weekly, we get a bigger or a better picture. So this stock rose during the 2021 melt up. It went from about $3.30 to 24 dollars. So it's just basically recovering. Nothing too out of the ordinary here. Let's look at the financial data points to see if this is overvalued, undervalued, etc. So I also do need to note this here because I did read the latest earnings. The company did get decreased revenues, which was expected. Decreased margins, I believe. A lot of negative business impacts, which they were accounting for. So let's just calculate the stock price and see where we're sitting. So again, market cap when it's over 1 billion, we like to add that. It is not over 1 billion, so let's just do our sales plus income divided by shares float. Again, these are all millions that I'm highlighting right here, so we do not need to do long form calculations. So 450.9 plus 15.5 so it equals 466 divided by 64.7. So this is a $7.20 stock, in my opinion. Um, and to get a little temperature check on how my calculations are, um, the price earnings, it's almost reasonably priced right now. It's still showing it's a little overpriced at a PE of 16.15. However, the forward price earnings shows that it is very undervalued. So kind of look between the lines there. Currently, it's priced okay. In the future, it's very undervalued. So you do with that what you will. They have a quick ratio of 2.6, meaning they probably have a bunch of cash, which is good. They have some debt and they're paying it off slowly. Earnings per share over the past 5 years has gone up 17%, which is great. Sales past 5 years, not showing any data. Insiders are purchasing a little bit, it looks like. Institutions own 43.2%. I'm going to say they own a little bit less because they were forecasting for negative numbers. They own more, 46% ownership, 46.7. It's okay, so institutions did add a little bit more, surprisingly. Gross margins are 76%. That is wonderful. Um, so, I mean, considering that they're not doing too hot, they're forecasting lower. Everything's impacted. Not everything. Revenues, etc., are impacted negatively. Total assets 449 million. Total liabilities 183 million. Liability went down from last year, which is good. Total assets increased barely. I mean, those are good things. Let's look at profit. Gross profit went down, understandably. It's going to go down more once they release this quarter. Net income's coming down as well, so it might be going through a rough time. We can see there was insider buying at around $2 to $4, and insider selling around 540. A lot of these sales here look to be for options exercising, so nothing too out of the ordinary. Albert Arani owns 59 million shares. Wow. So he, based off of that and the volume he sold, it's not even a scratch of the surface. So, cool. How much does the CEO own? The CEO almost owns a million shares. So again, this company is at $1.89. I really like this company. I don't have Thinkorswim open, and I would like to do a deeper dive on this stock in the future. I think it's going to keep going down, unfortunately. We're going to want to, excuse me, we're going to want to add once it consolidates at a new bottom. because this valuation does not make any sense. Um, you can call me crazy, $1.89. I think this is the all-time low. Does it show all-time low here? No, but if we go to the monthly chart, excuse me, I'm yawning and hiccuping. I think all-time low. Yep, if you see my line, let's zoom in actually. Let's just okay. Okay, well, I'm too far zoomed in, I guess. One sec. Okay, so over here, I'm at the 217. I'm not even touching the price. But if you look at the far right, I'm touching the price currently. And we have a huge red volume bar here compared to this one as well. So the stock price is at 22 when we had this huge volume. And look at here, we're at 189 and we look at this huge red volume. So just a sign of the times. Again, the smart thing to do is wait for a new bottom consolidation, look for support, and I'm going to be purchasing more. Don't copy me. Do your own research, as always. Um, so that wraps these up. I'm going to go ahead and do a closing summary for all these companies right now. All right. So to summarize my Robinhood challenge for weeks 9, 10, or I'm sorry, 10, 11, and 12, we are down currently 3%, and the SPY is at 3.9%. So technically speaking, the SPY is outperforming me currently, and you would be much better just adding to the S&P 500, the top 500 stocks in the US stock market. And just a quick note on those four stocks that we looked at. Just a reminder, we always want to buy quality stocks. They may go down, they may go up in, short term. But if we're looking at the bigger picture and the company is number one, healthy in terms of assets and liabilities, little to no debt, manageable debt, growth expected, um, and also growth, sales and growth over the past 5 years, showing they are consistent. Um, you can't really go wrong. Institutions buying as well is a good sign. So a lot of people can be very discouraged over the short term. You go to the gym one day and you expect to see results. It's not going to happen. You can't just buy into the stock market and see your portfolio go up or down. You need to stay consistent at it. You need to find solid companies, which is what we do. You need to feel good about the stocks and the companies you're looking into. So you have to strengthen your system of reviewing stocks. You need to make sure that you need to consider these stocks strong, whatever that definition means to you, and you need to stay consistent. If your stock goes down and you see it go on sale, why not buy more? When you go to the store and you see your deodorant 50% off, you're going to buy it. Or if you see your favorite beer or makeup, it's a good deal. You can make that decision like that, and you're like, this is a good deal. With stocks, we can do the same thing, but we also need to recognize that the stock market can be irrational a lot longer than you can be solvent. So buying every dip is not a great strategy. Wait for consolidation and support. Also, number two, the stock market usually doesn't make sense. It is manipulated. So people with millions and billions of dollars can swing the stock market up or down and influence the stock. So number two there. Number three, the stock market will always tell you the fair price of a stock, even if it doesn't make sense. Um, we see this all over the place. We have biotechs that have never made a sale over $100. We have small cap companies that trade around $2, $3 and then eventually go to $100 because they're mispriced. Think of your AMD trading around $2, $3 around 2015, 2016. Think of your Digital Turbine trading around 77, 80 cents to $3 in 2018 to then $100. Think of your Renasola stock trading around $1 in 2020 and going to $30 in 2021. So those kind of things. Stay strong, stay resilient, stay disciplined, and hit the subscribe button if you haven't. Like the video, and I'll see you in the next one. Thanks. Bye.